Shares of Walgreens down nearly 7% on the back of news. Roz Brewer has stepped down as CEO after more than 2 years in the role. Here to discuss what it means for the company is John Ransom of Raymond James. He joins us on the phone. John, appreciate you calling in. Obviously, the stock had a very rough go before this move. It is deepening its decline here. What does it tell you about where Walgreens is strategically in terms of the earnings power? They also did effectively kind of guide to the lower end of their earnings, expected earnings range as well.
Hey, good afternoon. So a couple of things. Number one, I think everyone would agree the company needed to pivot away from U.S. drug retail. For context, that division did $5.9 billion of adjusted operating income in 2019. We're modeling that to be $3.3 billion in 2025. That's when all the COVID noise and other things are out of it. So that business is in secular decline. So what the company's done is they spent $13 billion pivoting to U.S. healthcare. Problem with U.S. healthcare is this racked up almost $1 billion of operating losses. They've missed numbers every quarter. And so the company, every October, they give their forward-looking guidance. They do a 2-hour call. Well, now we have the CFO having stepped down and the CEO having stepped down. And so we're kind of left hanging with what the company's going to say to dig themselves out of this hole. And, a couple of years ago, they should have been earning north of $6 a share if they hit their plan. If you look at our furthest out estimates, we're modeling $3.85 a share. So we're some 40% below their targets. And that's even with a pretty big expected improvement in U.S. healthcare where the losses just keep getting worse every quarter.
So this shift in emphasis toward healthcare in the U.S., you felt like it was kind of necessary or defensible, maybe the right thing to do. Was it just the way it was executed? What's the strategic move from here, do you think?
Yeah, it's a good question. They bought 4 businesses that don't really fit together, and 2 of the 4, one of which just loses money like crazy. This is the Village MD that they've opened 190 co-located clinics. They didn't really seem to have a plan to attract new patients when they open these clinics. So the losses are, even they've said they're a year behind filling these clinics. And then secondly, the last deal, they paid $9 billion for CityMD. Those of you in New York know that one, then Summit. The last filing, that thing's supposed to be doing about $400 million of EBITDA. It was doing $70 million of EBITDA in a September of 22 filing. Then they buried it. So that one also looks like, so it's not so much, hey, healthcare is the wrong move. It's just the last couple of deals have been very expensive and the numbers are way behind.
Yeah. Now, you mentioned $3.85 a share is where you see ultimately earnings coming through. Obviously, that's a big decline versus historical levels where you thought they should be, but it also means it's 8 times maybe what could be trough earnings. At some point, is the franchise worth something here?
I think the problem with the last 2 years is the earnings have we had $1.30 of COVID in one of our years, and then they've been front-loading some unsustainable real estate gains. So I think the real question, the buy side thinks that the real earnings probably are in the low 3s once you strip out all the nonsense. So, yeah, at some point there would be value if earnings stabilize at some number. I think, though, in the front view mirror, you've got this $1.92 dividend that they're not covering from cash flow.
Right.
And so you've got the dividend. You saw it happen to AT&T when they cut their dividend. There are people hanging on for that 8% yield. And then, the credit, are they going to get a downgrade from one of the big credit agencies? So they piled up $10 billion of either severance cost or opioid litigation over the past couple of years. So the financial position's deteriorated. And so you've got some more shoes to drop potentially. But, yeah, the business might be worth something at some point, but we're still a ways from stabilizing what that cash flow is.
Yeah, it's pretty messy, I guess, along the way there.